Hello, how do you do your swing trading daily chart analysis for upward stocks or upward large cap stocks if you are using a long up to long swing trading strategy? You will open your stock watch list that you swing trade from, and you are going to analyze your stocks chart using a daily chart. And we have 3 stocks here that we are going to analyze, and the first one is MCK. So you can use either maximum daily chart, which we have open, or 1 year daily chart. We are going to use maximum daily chart. MCK, we would like to buy at this line, but right now is a higher up. It's still making higher highs. And yesterday the price went up. And yesterday was March 14, 2025, Friday. The price went up. It's characterized by a green bar. And a green bar means the price at the end of the day. The price at the end of the day is higher than the price in the morning when the market's open. And a red bar means the price at the end of the day was lower than the price in the morning when the market's open. The price dropped. We purchased it at some point. The date is on the S-axis. We purchased it there, and we sold it here. Not knowing if it's going to continue going up or if he will decide to go down. But and that area could well be a new high. Yes, a new high. And this one was as well. And this one was as well. So we stay in the trade for a little longer, and we sold it just to make sure we lock in some profits. So if I zoom out, so we know that by following this, we know that when it touch base with the trend line and pull to it, went up and pull back to it, it followed a secondary trend line there, to create the upside wall, and then went up, like reach new highs. And when it pulled back to this trend line, went up and start creating the second and pull back to the secondary trend line like here, and we know it's going to claim it for a while. So we bought it. No, I think we bought it, and let me take that arrow out of there. Let's change it to a line. So we bought it, and it went up to create a new high. So let's talk about the exit point. So at the exit point there, before we sold it, we thought about what happened after it reached a new high. So, and by looking at what it's doing, we noticed that when it reaches a new high, it will pull back. It could pull back to a secondary trend line. Therefore, we decided that maybe we could just sell it, because you'll notice that on a regular basis, it will pull back to this secondary trend line. And you can see that from there to here, when I put it there, we have 406. When I put it here, we have 440. Okay, so even though this will be lost if we stay in the trade from 406 to 440, that's quite a bit of growth in it as well if we stay along the trend line. But Anyway, so it reached a new high, and I was anticipating that at some point it will try to pull back to this trend line. Therefore, we sold it so that we can wait. When it pull back to this trend line, we will buy again. That was the assumption behind the exit. But again, that's something you have to analyze for each stocks, but depending on where you bought it, you might decide to stay in the trend longer because it's going to continue making new high, or pull back to the lower higher trend line, and you might still have profits in it. Again, it will depend on where you bought it as well. But because we bought it somewhere here, and this trend line is going up, but it's not that high yet. Don't know if it makes sense what I'm talking about. And that's how you do the analysis. So we bought it somewhere there, and do you see my line? So unless this trend line, the way it's going, go all the way to somewhere here, by the time it's pulling back down, if it pull back, I'll be negative in it. Does that make sense? I will lose these profits in it. Buying it at, let's just say we bought it at $5.94 and selling it at $6.41. You can do the calculation for $6.41 minus $5.94. Profit per share. We lose that profit. And if this trend line, because it's going upward, it reach a place that is above where I bought it before, when it pull back to it, then when it pull back to it, I will still have some profits accumulated and just lose a portion of it. Does that make sense? So by just analyzing those things, I decided to just lock in that profit and wait for it to come down to the trend line, and I will buy it again and go back up. But because it touched base with the trend line, this one here, when it does that, it can stay in the trade. You can see for how long it stay in the trade. The x-axis is the date, so here is 2023, and here is 2024 September. So well more than a year, maybe before it will touch base with it again. But at multiple occasions, it touched base with the higher trend line, this one. So therefore, depending on where we got it, we didn't get in on this trend line, but we got in on this one. Therefore, we decided to combine long up to long swing trading strategy and short up to long swing trading strategy to trade it. But that was the idea behind it. That way, if it start going down and decided to go here, well, we can just wait for it. But chances are it will pull back to this and will decide to go up. But we are just going to keep observing it. Do you see how we did this chart analysis? It will vary from each stocks, and pretty much from this area, it was creating a new high each time. And when it creates a new high, it will pull back before it will go again, and will pull back before it will go again. So we could decide not to sell it and stay in it, knowing that it's going to come back to where we bought it. But anyway, you have those charts to work with. Those arrows there just show how we traded in 2024 using short option and swing trading strategy, purchasing it and selling it few days after. But in 2025, we wanted to do long option and swing trading strategy. We bought it in January. We sold it in March. But to me, it's still a short trend line because I bought it on this line and not on this one, and I wanted to lock in some profit rather than waiting for that to come back down again and start going up and so forth. But I think either way will work. You have to decide which one you prefer. MKL. So at this point we are not going to buy it again because for long up long swing trading strategy, you want to trace your support lines passing by the lows of the stocks and preferably upward stocks. And here we have upward large cap stocks, and the support line are upward trending. I like to call it let's call it trend lines passing by the lows or the support of the lows of the chart, and you choose the one that you like to buy at, that the stocks most likely will come back to use as a support line and go back up. And you just compare your stocks chart, you just compare the price every day to where you want to buy. When they pull back to the line and start going up, you'll buy. After you notice about 2 higher lows or so, you'll buy. So higher lows is comparing the red bar, and you can see that this is higher than the one here. Sometimes the green bar will be lower than the red bar around the support line as well. But you can just, by just looking without zooming, this low is higher than this one, which is higher than this one, which is higher than this one. You have higher lows, and you can say that this low is lower than this one, which is lower than this one. You have lower lows. So when it's going down, it's going to be creating lower lows, and when it start going up, it's going to be creating higher lows. This low is higher than this one, it's higher than this one, it's higher than this one, it's higher than this one. So when you start having higher lows, about 2 or so, you'll buy at the first or second green bar that follow a pullback. Like this is the first green bar that follow a pullback, a red bar, so type of things. But we want to do that at the trend line. So MKL. But again, before you buy, you'll compare the entry point where you want to buy to a previous reaction of the price around that trend line to see, when they touch base with it, does it just start going up, or does it go up, pull back to it again, to see if you have a time to wait or if you can just get in and and hopefully this isn't getting too early. And trading large cap stocks, upward large cap stocks, if you get in too early and the price falls, you just keep it negative in your portfolio until it becomes positive again for you to sell it when you accumulate enough profit that you are comfortable with. So MKL, we have those purple lines that we would like to buy at, those trend lines, but right now the price is higher compared to where we want to buy. We'll just keep observing it. And we have the price went up yesterday, green bar. So the last one we are going to analyze in this session is MLM. MLM, we purchased it twice. That's why we highlight it on the watch list. The one that purchased already, they are highlighted. The one in yellow, we purchased them 2024. We have not sold them yet. So MLM, we purchased it there in 2024. We traded using short up to long swing trading strategy, and we bought it. It pulled back on us. We waited until it became positive. We sold it, and we bought it again, and then the price was just ready to go down. So we are looking at it. We trace our line that we like to buy next. You can see the mountain that it does. It does that tall mountain before it touches base with this trend line again, and then do some smaller ones. But so pretty much it touched base with this trend line, and we bought it again some days ago. So because we know that that's the lowest line that we trace it, we didn't wait too long either to use to have two higher lows before we get in. I'm trying to, let's go to 1 year daily chart, might help us see better there. So it was the lowest of the year, that bar, but we bought it. Let me see if I can zoom more. We bought it at the second green bar that followed this pullback. So you can see that we are not even having higher lows yet when we got in, because this is still lower than this one and we got in. So it's not our standard rules, but I know that it was the lowest trend line that we traced for it, and it is most likely will not go lower than that, although anything is possible. But it could go up and pull back to it again few times before leaving, but we won't want to sell it until the price is well above where we bought it before. So we'll be aiming to exit at the next high, or better yet, stay in even longer. Let's go back to maximum daily chart, and you can see that when it touched base with it went up, it pulled back to it again. So it could well repeat that around this area before it will decide to go up and use a secondary trend line to rest on to create the far upside wall of the mountain. But again, having this one up there, usually with short option launching trading strategy, we won't buy more until the price go up before we sell it. But with long option launching trading strategy and aiming for lower trend line to get in, when it reach it, we bought it, and we know that we won't sell it until we are higher up past that. But a previous, by looking at what it did here, is when it touched base with this trend line, it will create, this is when it exceed the previous high there, and then it pull back, and then it did it multiple times. This one will be higher, this one is higher, and pretty much a lot of highs before it pull back again, which is still higher than those, but you know, this is lost there, and then it created. So we'll have multiple highs when it reach the first one, which will be somewhere here. It'll take a while for that to get here. You can see from when it touched base with it here, like in June 2022, it was all the way up here. 2023 July, a year time frame before it reached a new high. So it could take a year to reach a new high, but when it reached that new high, it was still reaching it. Let's say all the way to here was March of 2024. So you can see that time frame from June 2022 to March 2024. It's just how you do the analysis, so that when you reach the the new high, we don't get out of it, but stay in it to lock in more profits and get out before it decided to start pulling back midway and go back again. We don't have to stay in along this side. We could lose these profits, by just talking about what will happen next if it's trying to repeat the same pattern. But stay in longer to lock in these profits and get out. But it won't be precise. Does that make sense? We just have to stay in until multiple highs are reached, and we just get out after we accumulate enough profits. So that is that one, and that's how you analyze your chart, targeting where you want to buy. And once you buy, you keep analyzing where the price is to where you want to exit, and when it's time to exit, you compare how it behaved when those highs were reached previously to see if it's okay for you to stay in the trade longer, losing few profits when it pulls back, and then accumulating more profits when they go back up, and lock in some more profits and just exit while it continue going up before it decides to pull back. But yeah, and by swing trading stocks that you could invest in long term, instead of accumulating your money along the support line, you will be cash flowing the fluctuation away from the support line by swing trading a long-term investment type of stock. And the profit accumulated allows you to buy the stock again when you pull back to the support line, but at a higher price, because it's going to be an uptrending support line. You are going to pay higher than what you paid before at that same line, because the line is tilted up, and this is the price from 0 up. So when the line is tilted, the price there is going to be higher than the price here. You see, when I put my mouse on it, the corresponding price versus here, the corresponding price. But accumulating the profit accumulated is going to offset the higher price you are going to pay for it, and you'll have some change left as well. And while the price is going down, you can use that money after you sold it to invest in another stock that you have on your watch list. That is the idea behind swing trading long-term investment stock, in my opinion. Thank you so much for watching. Just as small, one share at a time. You saw that price difference that we talked about earlier, even for one share. And just grow your account $1 at a time by accumulating small profits and adding more of your own money there as well. And over time, you will be able to grow your account to a point that profit you are generating from swing trading will exceed how much you are making from your first, will be higher than how much you need to provide for your need on a monthly basis, and over time will increase and surpass your paycheck as well. And at that point, you have earned money, you receive your paycheck, you invest in your account, in your brokerage account, and you use that to swing trade, and the profit from your swing trading, you send it to your checking account, a portion of it to your checking account, to support your lifestyle and to provide for your family need. And creating a watch list of stocks you can analyze within an hour every day is the homework for all of us to do. Thank you so much for your time. Thank you very much for watching our videos. Thank you very much for all your comments, and we thank you very much all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in asoc.com, our blog. On our channel and on our blog, we share different ways you can save money and different ways you can make money to reach your financial independence, where you do not depend on an employer to provide for your basic need, to provide for your family. And swing trading is one way to create a stream of income outside of your job. Is one way to make money. Just as small, either $100 per trade or $200 per trade or one share per trade. Just as small as your brokerage firm require to open a brokerage account, if that's $100. And as long as that amount is high enough to buy one share of stocks, of whatever stocks you have on your watch list that you want to buy. Some of them are highly priced and some of them are less than $100, like CMJ for Chipotle or Walmart, for instance. They are less than $100. Starting with large cap stocks as beginner swing trader is a good idea, in the sense that those large cap don't fluctuate quickly, therefore giving you time to react, to take action. If you are waiting, doubting, you will still have time to get in or to get out of a trade. And using long option on swing trading strategy, it works well for somebody that has a job and don't have a lot of time to be too active trading, because some days you won't buy anything, some days you won't sell anything, and some days you will sell a few or many, or you will buy many. But things are kind of slow pace for you to catch up. If some days you are very busy, you didn't have time to analyze stocks, you will be fine as well. Like yesterday, I totally forgot to check my account to see if something is profitable and check the chart to see if a new high is reached for that particular stocks for me to sell it or not to sell it, because there was one that I was aiming to sell or place the order to sell when the price is reached and have like 60 days or good until cancel set up until, so that when it reach that new high, before I notice it, it can sell it for me. But I decided against it. It was Thursday, and yesterday I should have checked the account. I completely forgot it was past, at the market close, before I remember that, oh, I didn't trade today. Even though I request a half day off from work, the weather was good and I went outside to clean up my front yard that I didn't do in fall, rake those fall leaves to dump it in my garden so that I can mulch the garden with a later. And I completely forgot trading, but hey, it is okay. So if you are looking for tips on how to create your own watch list of stocks, will you please check our playlist in the video description related to those videos. You create your watch list and you analyze it on a daily basis, and you flag the one that the stocks that didn't work well with the strategy you are using, and at the end of the year you just go to your master list to pull stocks that you didn't trade to replace the one that you flagged, and give them a try the new year again. And over time you will curate your watch list to be stocks that you are comfortable swing trading year around, that works well with the strategy that you polish to be you customize it to be your own, shaping it to match your personality type and your risk tolerance. And we have other swing trading related videos playlist there as well that we are publishing. And we have a series of watch lists, how you can create your own watch list in the watch list playlist. And when that one is done, we will start publishing the next series as well, putting one stock through all the filters to see if it's worth adding to our swing trading master list, for instance. That way, when you come across any of those stocks, any stocks that you're interested in swing trading, you know how to analyze that stock to see if it's worth adding to your watch list. It takes time to create a watch list, in my opinion, but once you have it, that's your library of stocks, because you have more than 3,000 stocks on the stock markets. But does not necessarily mean all of them are worth you swing trade using the strategy you want to use to swing trade. But finding the one that you are comfortable with and having a watch list of them, maybe watch list of large cap, watch list of small cap, watch list of mid cap, have your library of those stocks, and you create your watch list from those, and you just swing trade and just view as a part-time job that you created for yourself in addition to your full-time job. And this one will be a stream of income outside of anyone employing you but yourself. Thank you. you might as well over time just make it your job when you retire, but starting it years ahead of time. Thank you. Do you swing trade? Will you please share your answer with us in the comments? Thank you.